Welcome to the Not Unreasonable Podcast. I'm your host, David Wright, an actuary and reinsurance broker. This is a show of interviews with people who have something to teach us about managing our businesses and ourselves. There's a lot to learn out there, folks, so let's get to work. This show is brought to you by Beach, where I work and have worked my entire career. We are a global reinsurance intermediary, and we pride ourselves on creative thinking, deep analysis, and client service. Those three qualities are actually intimately related because you can't spend the energy digging deep into a problem unless you really care about the client. We find that when you really do understand the problem, the solution becomes obvious, even if it seems a little bit unorthodox to the outside world at first. The nature of insurance is to take solutions we know and trust and try to force them onto the problems of the day. We just don't settle for that. You can see further at beachgp.com. If you're an actuary, you, like me, probably dread the professionalism continuing education requirement. I think that the best time to satisfy this is in podcast time, while on your commute, while walking your dog, while mowing your lawn, while doing the dishes. Head over to notunprofessional.com where, for the price of a CAS webinar, you can get content dedicated to continuing education for actuaries, especially Professionalism CE. That's notunprofessional.com. Thanks for listening, and thanks for supporting the Not Unreasonable Podcast. And just before we start, quick plug for notunreasonable.com, where you can get links and notes related to all podcast episodes, today's included. You should also sign up for the mailing list. Why? Because I'm going to start putting together short bits of content every week. I do a lot of research and put a lot of work into these podcasts, and not everything makes it in. So each week, I'm going to send you a note with something that I've observed or heard or read. You'll enjoy it. Sign up at notunreasonable.com/signup. Now on with the show. My guests today are Ted Tafaro, founder and CEO of Exceptional Risk Advisors, and his partner, Chris Lack. Exceptional Risk Advisors writes insurance policies covering complex human capital risks for highly successful individuals such as entertainers, athletes, corporate executives, and other professionals. Ted and Chris, welcome to the show.
Thank you.
So I want to open with Trevor Lawrence. So quarterback for the Clemson Tigers, recently crowned national champions. He's 19 years old. Big surprise, thrust on the national stage, very successful. He's got to wait a few years before he makes a lot of money, but it's inside him. What should he do?
Yeah, fantastic question. A pretty popular topic around the office lately. Can't get too engaged in the answer on this one if you can understand my rationale behind it. But the key to it is that he's a phenomenal talent. Close to being generational talent. We recognize that he's just being held back by time as far as signing a mega million type contract with a pro team. He needs to protect that asset. It's something that's right there for him. It's just time again that's holding him back. But he can't just sit on the sidelines. I know we've seen some articles about their let's bubble wrap him basically. Let's put him on the sidelines,
sure.
Let him sit and wait. It's just, as any good athlete will tell you that you have to keep moving. You have to keep improving. You can't just stay stagnant. So he's going to have to perform. He's going to have to keep doing what he's doing. But in order to do so, he's be wise to
what does that mean? So reading online, just seeing recommendations from journalists,
Yeah.
right? Non-experts.
Sure.
They say he should buy some insurance. But what would that
Yeah,
be? Like, what would somebody like him need to buy or should buy? What would you advise a 19-year-old superstar? Got to wait 2 years.
Great, yeah. Part of that comes down to his family's decision for him. Part of it comes down to maybe some advisors he's got, and it really is quantifying what you think your career is going to be worth, and then working backwards from that to figure out a number that you're going to be comfortable with if something ever happens. So
as a limit for an insurance policy,
exactly right, yeah.
Against injury.
Yeah, so we through what we do for a living, we have the ability to cover him off for a career-ending injury, and then we have the ability to cover him off for an injury that doesn't end his career, but something that slows him down, let's say, or hinders him from making the most he could possibly make. So the two products there are a permanent total disability, which is the first one I mentioned. The second one's called loss of value, which is, as the title says, something happens to him that hinders his value or causes him to lose value going forward in the future and takes away from his income. So they'll sit down in the plan and figure out what a number is that they want to have, what makes it worthwhile for him to keep playing and take the risk, but at the same time protect that asset he's got.
Yeah, and when you're organizing such a policy, or let's say somebody like him buys a policy, what can and can't he do? Are there restrictions that come down? You got to think like, no bungee jumping or whatever, right? I mean, what sort of stuff? What sort of changes to his lifestyle would such a policy entail?
It's a great question. When in doubt, leave it out. But it's one of those things where he's fully allowed to do anything he needs to do as far as training to be a football player. As a collegian and a future professional player. Things like bungee jumping, wakeboarding, snowboarding, that kind of thing, we suggest leave it to the side. If they come to us and say, hey, he's got a real passion for wake surfing in the summer and something he really loves to do, it's his way of getting out there and kind of releasing and just getting away from it all, we can underwrite to that. We'll cover it in. We'll put it in the policy. Something like that probably doesn't cost anything extra, but we just want to know about it ahead of time, and we can put that in the coverage. So there's no restrictions as far as, hey, you cannot absolutely not do this, as long as we know about it. If we don't know about it, then we're going to put some exclusions in place. Yeah,
because those things obviously could injure him.
Yeah,
and trigger a claim on the policy.
Exactly.
Right. And is there an education process there, saying to a guy like that, here's a bunch of things that you might not realize, being you're 19, think you're invincible, you ain't.
Yeah.
How does that go?
Yeah, it's very true. I mean, between the advisors, the school advisors, and the insurance advisors, I mean, they have a service that they owe to the kid to sit down with them and say, hey, listen, this is what you're covered for. This is how this will respond. This is what it's there for. These are things you shouldn't be doing. If you're going to do them, you need to let us know ahead of time so that we can either get them taken care of for you or find another solution or try and talk you out of doing it.
Are there examples of something going wrong like this for somebody like that, where they have gotten injured being a superstar? Does something come to mind?
Yeah, there's been a bunch. There's, we've had baseball players cutting their hands, pitchers cutting their hands, cutting up turkey dinner.
Really?
A couple guys with chainsaws. I mean, some weird things like that. We
No
used to have
chainsaws.
no chainsaws. No chainsaws. We used to have a famous goalie. He's retired now, but he wanted to ride his motorcycle to get to games when he played in the NHL.
Yeah.
And he laid it down one day on the way to the arena. So thankfully, it wasn't a career-ending issue, but it was something we knew about. We had underwritten for it, but these things happen more often than not. Yeah,
Wow.
we had another funny one was a guy that no names to be mentioned in this, but he wanted to do a lot of buck hunting, wasn't he? From up in in a tree stand.
Surfing, we've had it all.
Yeah, we've had a lot of things. Yeah, so it's you can't stop guys from living their lives. We recognize that they. They're probably risk takers by nature, right? Thinking what they do for a living. So
yes.
we just got to work with them and make sure they're aware of that. Be careful.
So do you underwrite the person? Like, do you look at him and think, is this a risky person or not? Is that something that comes into
1,000%.
100%. Yeah, really? Okay.
Yeah.
And how do you do that? Do you ask them questions, interview them? Do you follow them around?
Yeah.
These are big policies, right? So this requires a lot of effort, I would think.
We'd be fools not to take advantage of what's available in the public domain. That gives us a lot of insight on people. But we look back at them from medical history. We ask them questions on applications and try and get a feel for who the person is, what they like to do, and what the chances of them doing something that could end up being a claim. So, we're here to respond to appropriate claims and take care of all that. But if you don't know what's happening and there's some wild and wacky things out there, you want to be aware of it.
Yeah, you have to assess the risk. I mean, you have to do it intelligently, and that's would inform the education process, I have to think, too. So maybe we'll pause there for a second and ask, how on earth do you get into a business like this? What's your personal background? Ted, you want to maybe start off?
Yeah, so I think the insurance industry in general is one of those businesses where you sort of go into it for two reasons. One is you're either born into it through some kind of family connection, or you sort of look around at the landscape and it's close enough to finance that it's interesting, and it's and people kind of migrate there that maybe aren't quite Wall Street oriented, but like the financial markets. Me personally, I was born into it. So my father had a very similar business to what Exceptional Risk Advisors is. We grew that during the 90s and then ultimately sold that to a public company in 2002. I worked for that business for a few years and then ultimately started this when my restrictive covenants ended in 2007. So for me, it was a family business. My dad still is involved in our business, although he manages a couple of accounts and lives down in Florida, has for 20 years, and enjoys life. So for me, it was that was my start. Chris?
Yeah. Like most people in the insurance industry, I woke up at 8 years old and just knew that I wanted to get into insurance. I crave knowledge for the insurance business, and no, I'm definitely one of those people that fell into it at a later point. I went to school back in Canada and thought I was actually going to be the baron of bars and restaurants. I was going to do that. And then I realized a few years into it that I really liked being the guy on the other side of the bar and the other side of the steakhouse table, and enjoyed entertaining clients, not entertaining, working those late hours in the evenings and weekends. I wanted to have a life around it. So the town I grew up in, Waterloo, Ontario, Canada, has a lot of insurance companies there.
Yep.
And just kind of started rubbing shoulders with people that were patrons in those areas that gave me some guidance as far as where I wanted to get into. Recognized that I had a lot of contacts in pro sports from hockey background and where I grew up and friends and family and everything, so migrated towards that, and then got into the broking world. I really enjoyed it, but realized my true calling was underwriting for athletes and entertainers, and that's where it sprung from there.
Mm-hmm. And your first job actually interacting with those athletes on kind of a business level. Tell me about that, the first experience you had there.
Fascinating. It really is interesting to see you take, good friends step back, and then they're 23, 24, 25, they're making a couple $1 million a year, and things are just coming at them fast and furious. And you really learn that the only way you're going to be successful dealing with those people is if you're coming to them with some really legit ideas and things you're trying to help them out with. There's a lot of people just trying to come at them with mundane, just silly ideas and
trying to screw them, take the money.
Exactly.
They got a lot of money. They don't have a lot of experience.
Exactly. Yeah. So if you position yourself as an advocate for them, and you really truly are. I mean, you have to be there to look at them, and that's how I got into this. I wanted to help friends just protect their income and make sure they. That's their biggest asset they're going to have. So help them find a way to make sure they're going to maximize their careers, and that was the ultimate.
And how about the insurance side? Like, how did you find the insurance part exactly? Do you have contacts there too who said, "Hey, Chris, you should sell insurance to these guys"?
Yeah, absolutely right.
Okay, interesting.
It was step really further back. So I was at the time living with my best friend back in Canada. He was playing in the NHL, and I remember, with the background in the restaurants, talking to the insurance guys, and short story long, an insurance policy showed up, and he was sitting there one day kind of having a moan about the cost of the insurance he was paying for, and his career-ending insurance, and I just kind of disability. Yep, exactly. The stuff that we actually do right now.
Do all of them buy it? Does everybody buy it?
Pretty much. It's something that's, particularly for hockey players, it's a habit they get into early in their careers. Yeah. The minor leagues give them some money, the OHL and whatnot give them money to buy insurance, and they get into that habit of it. Yeah, to protect.
Of course, they're not making a whole lot of money at that point. It's all potential.
Yeah, and ironically enough, I mean, the NHL players are definitely the most conservative buyers we have. They've always bought insurance. They typically do buy during their career, but they are the most conservative out of the rest of them. Yeah,
very responsible Canadian of them.
Yeah, exactly right. Exactly right. Yeah, that's exactly it. Yeah,
interesting. And another question popped to mind about this: which sports are the most dangerous? I mean, so think about average premium levels for, say, NHL versus NFL, NBA. What do you, any kind of thoughts there?
Yeah, it's easy. And again, this comes back to actual science. It's not slack science.
They're more dangerous.
Yeah, exactly. So footballs are definitely the highest area with claiming. Higher limits, because of there's a double-edged sword in the football world where you've got non-guaranteed contracts. So even when you have a big contract, you still have to buy insurance. So there's just more buying opportunities, but there's still more times for claims. And a lot of players, ironically enough, where we have our bigger claims are actually during areas where they've actually got a really big contract, and they get hurt, and the non-guaranteed parts what they claim insurance on. So that's our number one, highest priced coverage. But then baseball, basketball, and hockey, all kind of a similar cost. It all ranges, and it's all actually age banded. You think about it when you go back.
More likely to get injured than I found.
Yeah, exactly right.
You turned kind of 35 or 40, and you're like, holy cow, this is much harder.
Yeah, and that if you're a 32-year-old player and you get hurt, I mean, the chances of recovering are a lot lower than if you're a 23-year-old guy. The teams have to take a second chance on you, so that's for sure. And then I guess ultimately the one I missed that is definitely the highest price of the whole group is major league pitchers.
Right, arms.
Yeah. Arms.
I mean, look at it. I've seen pictures of pitchers in the moment of throwing, right before they release the ball, and it is at a crazy position. It's like all twisted around like a whip. It's
Completely,
like, man, that can't be good for you.
completely unnatural, and upside. Yeah, so one of the first things we learned underwriting when we started doing this way back was watching for pitchers, and then they call it the inverted W. If their elbows look like a W when they're in their motion, just stay away.
Really?
You know for sure they're gonna have Tommy John at some point.
Yeah, right. So how about the other kind of domains? Because athletes are an important part of your business, no doubt, but you have entertainers. I mean, what else? Ted, what can you give you a little profile of the organization and what sort of clients you do?
Yeah, so you can generally divide our business up into two components. We insure people and events. The people side of our business is far more robust than the event side. So obviously we talked a little bit about the professional athlete side of our business, and beyond that, we insure entertainers both individually to protect their own income. Again, as Chris said, it's their biggest asset. So it's our biggest asset too, frankly, as insurance executives, and yours as well, David.
Yep.
Then outside of the insuring entertainers personally, we do a lot of work on the corporate side, insuring entertainers for their various professional endeavors on the corporate side. So whether it's a musician being insured by a record label or an entertainer, on-screen actor being insured for their hit television show, we tend to get those key person type risks in the entertainment space.
Is that more of a life policy? Because disability maybe is less important, or I don't know.
No, it's actually more important. It's more statistically more likely to be the culprit that brings someone down. Sometimes they're joint policies, and the life insurance will go to a traditional domestic insurance company. Sometimes there are underwriting issues, and we'll get involved in underwriting the death component of that as well.
You say joint policy, you mean?
Meaning we insure both perils of death and disability.
Okay, right.
Apologize. So
right.
that's sort of one angle. And then, outside of that, our biggest book of business, if you will, is really corporate executives, and that's split up between two parts of our business. One is individually underwritten, where we might have the CEO of a public or private company that makes a couple $1 million a year, and the traditional disability marketplace can't handle protecting his income adequately. So we'll do sort of a benefit plan to bring him up to par and protect his income for adequately compared to sort of rank and file people. And then we have a very large executive benefits platform where we go and insure large law firms, consulting firms, investment banks, public companies, where they'll take their top earning professionals and they'll do what's called a benefit restoration plan. So in that business you might have a layer of group insurance like most corporate professionals have, and then beyond group insurance there's a layer of what's called individual disability income protection that might be underwritten by domestic partners like Unum, for instance. And then once those are maximized, you wind up with a reverse discrimination issue. So you could have individuals that make $1 million. If you take a typical law firm, you might have 100 partners out of a New York City law firm that make all above $1 million, and they might have a group and individual policy that protects them up to $25,000 a month. Well, for those individuals, they're only getting a fraction of their income protected, yet their legal secretary's got their income fully protected. And this is sort of a way to restore them to a similar replacement ratio, so that, God forbid, they get sick or injured, that they're protected.
So what is similar between, let's call it, athletes, entertainers, corporate executives? Are they just kind of radically different?
The problem is the problem.
Yep.
Right. So you pick it, whether we're talking about a professional football player who's 26 years old and he's got a career in front of him that's 5 years, or a contract in front of him that's 5 years. How do you protect that? If you're talking about a corporate executive who's 45 years old, he might be hitting the prime of his career. He's in stride. The expectation is he's got 20 years of earnings in front of him or more.
Yeah.
And how do you protect that? And it's the same with an entertainer. And then on the corporate side, the risk is the risk. So if it's a hit television show, they might say, well, we have $100 million of prepaid advertising sold on the Chris Lack show, And what happens if Chris Lack can't show up for work? Well, their biggest assets ride the elevators in the morning, and our job is to protect that for that company.
So who tends to buy? Who's actually making the call on this stuff? So with athletes, it's their family, I guess, because you have young folks who say, I don't know what to do here. But maybe go through those categories and say, like, who's actually negotiating and saying we need to do this. So for athletes, it's going to be
So I think
teams too,
I can kind of give you across the board on the individual purchase, and maybe you can handle the corporate purchase. How's that sound, Ted? Yeah. So on the individual purchase in the athlete space, we're either having a financial advisor, an attorney, or an agent. Sometimes the agent and attorney is the same person that are sitting down with the player and saying, okay, here's what your career is worth, and this is what we have to think about. As things progress, oftentimes they get other advisors involved in it. A lot of times there's a business manager, and the business manager's there to just handle everything from bill paying to accounting, tax returns, making sure that these people are just able to focus on what they're doing for a living, and not let the other stuff get in the way, like the white noise get in the way. So they're often a good influence as far as saying, you should have this, and this taken care of. And that's not just for disability insurance, especially stuff we do. That's for life insurance. It's for personal lines insurance, liability insurance. They do a lot of that too.
Yeah, are there similar people that keep popping up? I mean, there must be a kind of finite universe of people that actually manage.
Absolutely right.
So how big is that group of businesses?
It's not a huge pool of people, but it's they're pretty robust businesses. So you take the business management side of it. Most of them are centered in California. Here on the East Coast, you sometimes return more family offices, but the business management offices that are set up in California have migrated into the space of athletes as well. They used to just be really focused on entertainers and the folks involved in that business, but they handle 95% of the people that are in that industry.
So it's like a handful of firms, like 5 or 10 or something like that.
Yeah. But they are the it's
a little bit more than that.
Okay.
Yeah, a little bit more than that. Yeah, but it's I hate to call it almost a rite of passage, but it sometimes feels like a rite of passage where someone makes it big enough in the sport and entertainment world, and they can have someone like that want to work with them and take care of them. So it's something that happens. Yeah,
because probably a pretty good service that they offer. A lot of things they hadn't thought of.
They'll help these athletes everything from sourcing cars and mortgages.
Oh, really?
To, they really manage their entire financial life.
Wow.
And to a great extent, I think they're in the business management space. They're the number one influencer that gets them focused on insurance and trusts and the estate topic and protection in general.
Right.
And how does we'll come back to the other categories too, but how does the business get to you guys? So these business managers will then contact
insurance advisors,
an insurance advisor, dedicated to insurance, and then you're one of a group of potential vendors to go to sell the insurance. Is that right?
We like to think we're the best. But
of course,
they're about.
But you're competing
about a
against
handful of folks that trade in our space. We all really have different specialties, if I'm candid and honest about it. So with limited amount of overlap, we certainly see competition on just about every professional athlete case that's worth a salt.
Yep.
But that landscape changes if we talk about a different class of business, frankly.
Yeah, different group of competitors.
Yeah, different group of competitors. So, as you can understand, a business manager by nature is a fiduciary, and typical sort of code of conduct, if you will, for a fiduciary would be to get multiple bids, multiple
go to the market.
Sources. The reality is that when you have a very significant placement, there are really only a couple of us in the industry that know how to deal with that.
So what's significant?
Well,
how big? I saw in the press, associated with your name, $200 million policy for a Will Smith bungee jump.
That's big.
That sounds pretty big.
And in my infinite arrogance, there are only a couple of people in the planet that could put that together effectively and efficiently.
Yep. So is that as big as it gets? What's the biggest one? Or you don't have to the names are in, of course, but how big does it get?
I'd have to look at the actual number, but 2 years ago we placed over $300 million of disability insurance on a single individual, and
$300 million. Wow!
And that was that was by far the biggest that's ever been placed in the market. And the capacity nowadays has constricted a little bit in our industry. I would think that on a single life, if you could do anything over 200 million is a global placement, pretty much.
And that's a life insurance policy, probably would be that big?
Disability or accident related.
Because there are only so many people out there that are, I mean, I don't want to put it quite this way, but are worth that much, right?
Yeah, correct. Correct. But, you'd be, in particular, when you take it into the corporate realm, and I'm talking about outside of the personal, individually.
Yeah, hedge fund
produced
titans
policy.
kind of guys.
Yeah,
gals.
you look at there are some of these individuals out there that generate so much wealth to the corporations or the machine that they're serving that the numbers are staggering. They really are telephone numbers to some extent.
Yeah, right. Yeah, and so let's talk about the buying decisions for kind of covered athletes, entertainers. Anything different, or is that the same? Are that really the same groups of managers?
Yeah, I would say very similar.
Yeah.
Very similar. I mean, it comes down to there's probably a little more of a runway as far as figuring out what your potential income could be over your career. It doesn't.
Sure.
Athletes are it's a very short window. You need to make sure you cover off that. The entertainers are a little more worried about their monthly cash flow, where the athletes are typically more just worried about the end of their career because they've got contracts in place. They know they're going to get money from the team through the duration of that contract, but at the end of it, they're on their own. Whereas the entertainers could have a stop. Something happens to them where they can't make money for a few months, so they're going to want to buy something that's a temporary total disability. So if they're on the sidelines for a short period of time, they'll be paid for, or they'll be covered off with a benefit. And then again, we can still do we always do deploy a lump sum benefit at the end of it as a permanent total disability.
Well, this comes to mind just now. What does it mean to insure a body part? Is that a disability thing?
Yeah,
I mean, you see a lot of stuff on that.
Yeah, it's
Is that real?
it's real. I mean, they're real policies. That people really pay for them. It's definitely more of a marketing ploy than it is anything else.
Interesting.
Yeah. We gladly answer the phone. We love to be part of those policies because they are still good for the industry. All press is good press in the way you look at it. But when you dig into the nuts and bolts of those policies, it's pretty tough to claim on them. You're not going to get something claimed if you're really genuinely concerned about something. You're much wiser off or better off to look at doing the entire package.
Yeah, so that would be a kind of carved out disability policy. Is that how that works?
Yeah, you write it with all kinds of exclusions and limitations. I mean, the practical reality of it is that the first thing we're going to do when we field those calls is try to convince the person on the other end that they've got a
This isn't what you want.
bad idea. Yeah, this is not something you should be pursuing. So
just because there's no chance you're ever going to claim on this, or
yeah, they're not thinking about it right. To be very candid, and the ones that do get placed, for the sake of full disclosure, get placed for PR purposes.
Yep.
And PR purposes.
So
really
they're probably
only.
cheap too, then.
They're cheap. We make them cheap. You got to be disabled in Central Park by a zebra on a Thursday.
Yeah. Okay.
During a leap year.
Right.
And
then issue the press release.
Pay us $2,000, and then you can say that Lloyd's of London insured your legs for $1 million.
Yeah.
But,
Heidi Klum's legs. Left one was less than the right because
exactly.
I had a scar. I read about all this. It's hilarious.
And so we'll get the calls, and they'll say, I'm working with a pianist and I want to insure his hands, or a surgeon and I need to insure his hands. And then you sort of explain to the advisor, well, listen, if he blows out his back and can't sit and play the piano or stand over and do the surgery, gets cancer, has a stroke, has a heart attack,
right.
Here are the 43 things that are most likely to cause a claim, and you're not insuring any of them. So, this is why we think it's a bad idea, and you really need to insure the whole body. And eventually they get it and they understand. But I've had in my career I've insured people's legs, film stars' cleavage, name it. We've done it, and we sort of do it for a wink and a nod and a couple $1,000s in premium, and then we get a laugh out of it, and we ask if we can be shared in the PR. But there's really no insurance value in what we do in that regard, other than it's something to talk about.
Yeah. How is there anything that you think are the misconceptions about maybe the athletes that they things that they think they need, or maybe gets publicized, but it's just kind of not really a thing?
I'm trying to think.
Or how about the corporate executives, for that matter? You know, are people kind of barking up the wrong tree? Because you think that I initially thought when I was reading those articles about the body parts, the cleavage, the butt, the legs, whatever, that there's some logic there, I suppose. Kind of just sort of squint your eyes a little bit, and or maybe not, and that is an element of that person's appeal. But I think that the insight that you guys brought there is like, well, that may be true, but the real risk isn't that. And the risk is blowing your back out, which is a very mundane thing that happens to everybody. And that's the thing you should be covering. And misconceptions maybe about your other clients that might be interesting.
Well, I mean, I think Chris could comment on it better, but the reality on the sports side is that there's been over the last decade a lot of talk about, as Chris mentioned before, there's sort of two products for the athlete side. It's
right.
Loss of value and permanent disability. And I think a lot of advisors, players come and say that, they absolutely need loss of value. And the practical reality is they need insurance protection. And the permanent disability insurance is really the anchor product that they need to purchase. Mm-hmm. I think that's one misconception in that space. On the general corporate executive benefits business, the reality is that all the people that we serve at the ultimate client level, the policyholder level, are just really busy, working, growing, building their business, being, white shoe corporate lawyers, whatever they are. And most of them don't have a clue, as sophisticated as they are, that they're making $4 million a year and they have 12% of their income insured. Mm-hmm. And so they're going to take an 88% pay cut in the God forbid scenario.
What's the chance of something like that? Like, what's the probability of that happening?
3, 4 in 1,000.
Yeah, okay.
So it's not that we're talking about something pie in the sky. I mean, these happen. I mean, we have drawers and drawers full of active claims. So people need the protection, and they pivot to, and they, as a generalization, corporate executives, lawyers, they think they have it. They think that their employer provides it and that they've got coverage.
Yep.
And they do have it. And their employer does provide coverage, or they provide access to it. But it's woefully inadequate. Mm-hmm. And so all these corporations, law firms, and the consulting firms are a bit more paternalistic, however you want to say it, and they've adopted sort of richer plans to equalize these benefits for their highly competent employees. The corporate world is really just getting around to making sure that they have deeper plans that equalize benefits for their top folks.
Is that growing, that side of the business?
It's growing
really?
Very rapidly.
Really?
Yeah.
Over the course of the last kind of 10 years? Or maybe?
Yeah, I would say that coming out of 2008, certainly, companies were, speaking mainly to the public marketplace, the public marketplace was not really enriching benefit plans, and that lasted for quite a few years.
Yep.
Now they don't look at it necessarily as enriching benefit plans for the top people. It's actually looked at as, no, we're equalizing the benefit structure for our CEO, our CFO, so that he's got that same level of protection that his rank and file team has.
Mm-hmm. Do organizations take out? So I'm thinking, like, let's say an event for an entertainer or athlete would take out an insurance policy that would cover, because that screws up the event.
Yeah.
Right? So, I mean, who was it that broke her leg? Was it Britney Spears or somebody? And couldn't maybe it was, I don't know, it's Christina, I don't know who it was, some female entertainer.
It's Lady Gaga blew out her leg.
Yeah, that's right. And so that's like, holy cow, now all that cash is gone. So that would have been covered.
Yeah, so if you think about all the different venues, all the different parties, is a better word, that impacted, right? So you have your promoter.
Yep.
Be it Live Nation or AG, one of the big firms, right? They've had probably millions of dollars at stake on something like that.
How many millions? Like the promoter?
I'm sure
tens. Indoor $2 million, outdoor $5 to $8 million.
Because they book the venues and they have to put deposits down and all that stuff.
Yeah,
I guess.
and they've given guarantees and yada yada yada. So to the artists, they've got, I mean, everything from, they've booked
Right.
transportation companies,
Yeah.
wardrobe, back,
Built the set.
the whole 9 yards.
So the promotion company covers all that.
Yeah, but that's just one.
Yeah.
Then you've got the artist,
Yep.
and they've got their own interests, and they've got tens of millions of dollars at stake with an artist of that caliber. And then you've got the individual venues too. So if if the Garden loses a night, that's expensive.
Mm-hmm.
And it goes on from there. I mean, if you even think about some of the contracted firms that
Merchandise.
that could get dismissed in the event of a significant loss like that.
Mm-hmm.
It's
It's a pretty big ecosystem around entertainers.
Oh, really?
And I guess is it different for athletes, and they don't really have quite as many mouths to feed, I guess?
I think one of the biggest policies we wrote last year was really, we spent a lot of time thinking about the income of these players as it relates to their contract, right?
Right.
So particularly in the NBA, where you're seeing massive contracts nowadays, the income's $10 million, for a guy that rides bench half the time.
Yeah.
But for the real marquee players, their income off the court is almost as significant as their income on the court.
Right.
And that's a whole. I mean, some of our biggest policies straddle both. Chris can speak to some of the unique.
Because the
things we've done
promotional,
there.
that's what's really. I mean, was it Tiger Woods? Was that a few years ago where he was making some multiple?
Yeah. All that. I mean, between the golf, the apparel companies, those type of things, the shoe deals in the NBA are just staggering. I mean,
Are they?
Every sport's got something that attaches to it. I mean, you look around the boardroom we're at right now. You got some Under Armour shoes that were worn by a former pro athlete. I mean, he was getting paid.
Those
to
are
wear
very
those.
big.
Yeah, those are very big shoes. Yeah. He was getting paid. He's getting paid to wear those kind of things. So there's always that. The key to that, I guess, ecosystem is that pro sports is really the one thing that can drive live eyeballs on TV still, right? So all these advertisers are looking at that going, we can get real time. We're not going to get fast forwarded through. People are actually
Our
sit there
logos
and,
right there the whole
exactly,
time.
yeah, and they're put in front of people all the time. So there's big stuff there. And the other part too is that the teams do recognize that we've kind of glossed over it, but teams are buying key person insurance on these people too because they've got a ton of money wrapped up in that asset.
Sure.
and
Well, in
that
the
assets.
NBA, right, where you get a good draft pick, it's like let's ride this,
Yep.
transform a team.
Can change the whole franchise. Yeah.
Yeah, for years.
Yep.
So that's a pretty big risk.
Yeah.
How about combat sports? Right, I mean that's as dangerous as it gets, right? Do they, like a Floyd Mayweather or something like that?
Sure.
Does that ever enter your sphere? Or is that just like it's too dangerous?
It depends. We've definitely written it in the past.
Right.
It really is. Not to use there's a reason why Advisors is in our name. We do a lot of business where we give advice, and whether we get paid for that or not is different. But being able to giving that advice to people helps them a lot. So a lot of the combat sports really only need coverage until they get in the ring, and as soon as they get in the ring, their money's made. I think some people are taking advantage of them for a long time before, where they're saying, you got to buy this coverage, and you really need to have this, and you have to have that. And if you actually peel back the onion, it's really only that getting them to the point of being able to participate in that event. So we call that non-appearance type stuff. So
Okay.
if something happens to them during training, that's the coverage we would offer instead of just actually the
it's
actual
expensive.
fight.
Yeah, it would
It's
be.
expensive.
Yeah, I mean their training is pretty dangerous.
Yeah.
Do you put? I'm curious. I'm just continually interested in this idea of like changing their behavior. Would you say to somebody, you can only do I don't know so many days of hard sparring or something like that? I mean, does it get that detailed?
No.
No, because they got to be able to do whatever it is they do.
Yeah, and the reality is, athletes are the biggest group of sort of young, unsophisticated.
Yeah, sure.
players. So
Yeah.
to try to even think
Pointless.
that you're going to have influence there is not realistic. But specifically on boxing, I won't comment on UFC or anything. The rates there need to be in the 10% range for it to be a
Wow.
profitable endeavor. It's hard to get people to pay it.
Yeah, it would be. What is the kind of the claims rate for say like a hockey injury? I mean, that's what's funny too. Is I'm thinking to myself, well, if you're 30, it's so different than if you're 22. Any thoughts on what the probability of an injury is for these folks?
It's funny, but it's really, really similar to house insurance.
Yeah. Okay.
That's how it
Interesting.
works out. And it,
It's like your house burning down.
Yeah. I mean, we kind of view our insight is a little bit proprietary, so I don't want to get too in the weeds on it. But it's if you own a house that was worth $4 million, would you buy insurance on it?
Yeah. Well, yeah.
Yeah, sure you would. And if you had a career that was worth $4 million, would you buy insurance on it? Yeah, sure you would. And the fact that the reality of it is that the careers that are cut short end up being a little bit on the actuarial perspective, a little bit higher than the rate you would have houses that are lost.
Right. Yeah.
So a big misnomer in the business is you get a lot of people who get frustrated that I bought insurance my entire career and I got to the end of my career and I didn't have anything for it. It's like, well, hang on a second. You had a great career. You played 12, 13 years. You made a heck of a lot of money.
Yeah, sure.
Sorry you didn't have an insurance claim, but you made a lot of money playing your sport. And it's not retirement insurance. It's disability insurance. And it's meant to be there in the event that your career is cut short and you don't have that career that comes to a natural end.
Yeah. Another thing that I was reading up on, just researching for this, was the two sport athletes, which I'm thinking like a Bo Jackson, Deion Sanders kind of person. What considerations do you have? Like Deion Sanders comes to you in 1995 and says, "I'm playing both.
Yep,
I'm figuring it out." What do you say to him?
Sure, it's really really simple. These are own occupation policies.
Yeah.
So you need to identify what your occupation is going to be, and if you're really really serious about having the two occupations, we can cover both of them.
Right.
But your career perspective in one occupation might be different than what it is for the other occupation. So we might be able to cover you for $500, and I'm not giving specifics here, but we might cover you for $500,000 in one sport for a career-ending injury because we don't think you have a heck of a robust career in that one, but we'll cover you for $10 million in the other sport. And that you have to kind of sit there and massage egos, because sometimes you have these people that think they're world's best athlete, they can do anything you want, but when you really sit down and look at it and go, okay, we can help you out for both sports, but this sport we only see you potentially making this much money.
Right.
Yeah, hard conversation.
Yeah, you're a better football player than you're a baseball player.
Yeah.
Sorry, Deion.
Yeah, and I mean, it's going on right now in the press too with another player. So we're not involved in that case at all. But it's a tough decision. Tough decision. I think. If you look at the reality of it, I mean, you deserve protection. You should have it, and you can definitely bespoke a policy and make it proper for them. It just might be a little bit some nuances to it.
Yeah. Do they ever intervene? Does one of the, because you're dealing with management companies and the same people you're negotiating with all the time, does an athlete ever turn up and say, hey, hang on, guys, you really say this is how it is, and you're like, all right.
Yeah. So some of the best phone calls I have in a day are actually when you get on the phone with an athlete and start talking about that, and you can kind of get in the weeds more about where their mindset is, because we can create the world's best insurance products, and we can think we create the world's best insurance products, but until you actually test it on the person who's going to write the check for it, which is that end user, you never know. So if they come to you and say, I'm not really worried about this, but I'm really worried about this, it helps you better equip them for what they want. So those are great opportunities. We don't have them a lot of times. A lot of times it just is the advisors doing it, and a lot of times again, back to Ted's point before, they're just so busy doing what they do, they don't want to get involved in that. They're paying people to take care of that for them, but it's always welcome.
Yeah. No, go ahead, Ted.
Yeah, sorry. I was going to say, the dual sport athlete is sort of, and now it straddles some of the other components of our business too. So, like, even on the entertainment side, I can just think that, how music, for instance, has evolved over the last, 15 years of my career. And, years ago it was all about putting out new content and new albums and record sales and all that good stuff. And now that's hardly material. It's about being on tour.
Yep.
And so,
Has touring got more lucrative at the same time?
Far more.
Okay.
Far more.
So they're doing okay.
Yeah, they're doing great. We're not feeling sorry for anyone here that's got that's got a hit tour. But the reality is that in the years past where you could insure someone sort of as a musician or an entertainer, and then they could mix an album and cut an album and write song and put it out there. Well, that was great. That's all they really needed to do.
Not very risky.
And nowadays, they've got to go out and be on tour and promote.
Yeah.
And those are sort of one's a riskier underwriting proposition for us.
Yeah.
So if you're insuring someone as a touring music professional, to your point, they blow out their leg. Well, that same person could blow out their leg and actually 2 days later go into the studio, start writing music, produce a #1 record-selling album.
Yep.
And in their mind, in their business manager's mind, they're sort of disabled. But in the practical reality of the contractual language of an insurance policy, well, if you're insured as a touring music professional, you're disabled. But actually, if you're insured as a musician, you're making a beautiful album that's
if you're late era
going
to Paul McCartney blows his knee out, he's still putting the White Album out.
Still putting the White Album out, right? Exactly. So it's sort of evolved and it's sort of gotten different, and and that same problem exists throughout our portfolio. Whether it's even if you look at sort of a doctor that is maybe got half his duties surgical and the other half he's a cardiologist. They could get disabled as a surgeon and the proverbial can't use their hands, back, stand over, do a long surgery, but they can still make a robust income as a cardiologist. So we need to we've evolved our policies.
Do you do medical profession as well?
We try to avoid it.
Right.
But we
Why is that?
Believe it or not, it's probably harder to make a profit in that than it is to make it in football.
Because of the malpractice stuff, or?
I think there are a couple different factors. I don't think that they're all statistically related to actual morbidity rates. I think there's just sort of a culture in the physician community that makes underwriting disability insurance in particular a challenge. So we're very selective on what we put into our portfolio as it relates to medical professionals.
Because they push themselves too hard, or they
push themselves too hard. Look, these are folks that have never really practiced in their trade until they're almost 40 years old.
Yeah, it's
right?
crazy. It's amazing.
You think about what I had learned and been through in my life and my career by the time I was that age, and as Chris was saying earlier, he thought he wanted to be one thing, and then he pivots and he moved and everything else. If you're committed to that medical track and you get to the end and now you're a neurosurgeon and you're 30-odd, 36 years old, what if you don't love it? What if you don't? You just spent. You just invest. No, but it happens, and the hours are a grind, and the stress is enormous, and they maybe didn't understand the full weight of the stress. So, it's actually fairly easy to say I'm disabled as a doctor and get another doctor to acknowledge that they believe that they're disabled. So, there are a whole host of factors that make that market a challenge for us. And we understand the need for it, and we believe in the need for it at the same time. It's as underwriters, it's a risk that we're very cautious about.
Yeah. Well, there's the thing that underwriters do. This is something that I talk about periodically on this show. Is really sussing out moral hazard.
Yeah.
It's like, are you going to screw me?
Yeah.
And you're anywhere. You're going to figure that out somewhere. I mean, you can see it in athletes, too. I'm sure that a lot more of them want to buy a policy when they're 32 than want to buy when they're 22, all of a sudden. And it's like, well, hey, guys, I know what's going on here. This isn't going to work.
And we'll look at, as Chris said, obviously the public domain is something we'll take an active look at. But if we have a big enough placement with sort of limited information, we'll even, if we have an authorization, we'll go out and get a background check done. We'll look at, see what kind of lawsuits are against anyone, if there are any liens against someone, what kind of payment credit history they have, because a lot of that speaks to their moral character.
Yeah, sure.
So it's just, you also can see certain things on social media if you have someone with the right tools that, otherwise we can't necessarily see.
What kind of things make somebody uninsurable? Is it different across these different kind of domains, or is it all pretty much the same?
If someone had let's just take the obvious in the entertainment side. Someone had, a drug and alcohol history that was of significance. That's something that, we're going to clearly want to laser out and exclude. If someone's had, felony issues or, violence, gun charges, things like that, we're going to want to be very cautious. We're going to want to, put the appropriate exclusionary language or charge rates that, are fairly enormous to cover our exposure. Mm-hmm. Some things are uninsurable, but for the most part, if we have the right profile, we'll take an honest look at it. And what I mean by the right profile is we're going to get more aggressive on sort of an independent third-party purchase of insurance versus someone coming to us saying, hey, I want insurance on myself.
Yeah.
And they're a bad guy.
Yeah.
So.
Yeah. Is there? Here's an idea that kind of bounces around in my head, and I think that really successful people tend to be pretty good collaborators, right? But I'm wondering, because they have to work. Entertainers is the one that comes to mind. I mean, team sport athletes too, right? They got to work with other people, and they have to cohere in an environment where if one person isn't doing their job, then the job doesn't get done, right? You don't win the championship, you don't go on tour, you don't finish the album, whatever it is. I'm wondering if you have any, I don't know, any impression, anecdotes of whether or not that's true. Do you have people who are like, oh man, superstars are always really hard to deal with, or actually they're always really easy to deal with? What do you think about that?
You pay attention to that. It doesn't matter. You pick up a magazine for sports, and the teams are traditionally successful. The ones who really get along. You hear the guys in the room going, we just love these guys. We're all, it's like a big family in here. Those are the ones that just historically are successful.
Does that make them a better risk?
Absolutely.
Really?
And it's the same with bands. I mean, we'll look at certain bands. I mean, music in my youth, I'd say, definitely not someone we're working with, but Oasis. I mean, you look at them like, hey, we're going on tour. It's like, maybe a month. You think? You definitely.
The brothers have gotten into a fist fight last night.
Yeah. Liam and Noel are at it again. The joke would always be like, if you want to see Oasis, get there in the first month of the tour, because otherwise it's done. So, So you do pay attention to that for sure, and I think the dynamic of it doesn't matter whether it's it's your office place. You look at there's a hierarchy in here. There's in our office. There's a hierarchy on sports teams. There's a hierarchy in the band. There's a hierarchy on a film shoot. I mean, there's certain entertainers that are just tough to deal with. And there's certain people that are known as being divas that are hard to work with, and eventually producers or directors just get sick of it, and then they just go on the sidelines. I mean, that's how it works.
Yeah, we've definitely had our fair share of folks that make life easy, and you'd be amazed at some of the stories. I mean, last year we had probably the number one touring artist, and needed to set up an exam for him, and he just sort of like casually shows up, drives himself to the place. Hey, how's it going? I'm here. People are like, you're who? And and that's great.
Really helpful, pleasant.
And then you have other guys where you need to arrange for car transportation. They have bodyguards. They have you
get a whole rider. I need Fiji water. I want red Skittles. I need
all that kind of garbage.
Ridiculous, and it frustrates the heck out of I mean, it just makes our job complicated for no reason. I mean, these are things that are an hour outside of their normal day, and we're just trying to do the underwriting so that they can have a tour that's going to rake in millions of dollars or whatever it is. And anyway, and we do take that into consideration. I mean, I think you can't not look at someone and say, "Oh, really? Is that what we're dealing with?"
Did it change? Have you seen people who maybe earlier in their career, if you've worked with them for a little while, and they kind of start one way and end another way, whichever way it goes? Are they
I'm too
pretty
far
consistent?
removed from it. I would.
You don't know.
I don't really know that I have a good answer for you.
Because people get older and they just kind of settle down. You'd think.
You'd hope.
Maybe. Maybe not.
There's been a bunch of.
They slam into a wall.
Yeah, you hope. I think you hope. I mean, there was a couple big tours last year where, the underwriting on it was the simple fact that one of the key people on this band who had made an absolute fortune during his career, and again, it was a band that was kind of the music of my youth, so I was pretty switched on to what was going to happen with this band and the history they'd had. But this particular entertainer, he was the lead singer for the band, he was just absolutely broke. Right. And needed this money more than he'd ever needed anything in his life.
Right.
And you write that tour, and you know it's going to go off because this guy's at the point where
he needs it bad.
He needs it bad.
Yeah.
And so sometimes you take a chance on that. In our business, we call it taking a punt on something. And you can take a punt on that because you can sit there and go, the moral hazard's gone. This person needs this more than anything else. And the insurance will probably tag the insurance. We'll attach it at a lower amount than we normally would do. Mm-hmm. That it's definitely worst case scenario versus a lot of times we're in an income replacement situation. This is more of just the safety net at the bottom of the trapeze act.
Mm-hmm. How aware are the lead singer, like a band leader, let's say, or let's say the leader of a team or of a company? I mean, how aware are they of these risks and kind of focusing on it? Is that
they know it because they cut the checks for it. It comes
do.
out of the tour accounting, and they're aware that it has to be there. A lot of times, a company will say, "Hey, we can't advance you the money." That doesn't matter, whether it's an entertainer, it's an artist, athlete. It's somebody from a hedge fund or somebody during a big M&A deal. I mean, they recognize that the money doesn't get advanced to them until they've got the insurance in place, so that they're aware of it for sure. And most of the time they got to get lit up for medical and whatnot too, so they do know that it's being done. The real professionals, back to Ted's point, just recognize it as part of doing the business. It's just what has to happen in my business.
One of many things they have to do.
One of many things that just has to happen, yep.
Yeah. So what about these, like, another thought that I was having listening to there about entourages and the like, how does that impact things for you guys? Do you look at, does that matter, that sort of stuff?
Not too much. I mean, you recognize that everyone's got it. Yeah, I think back to the public domain stuff, I mean, you definitely check and see, who's hanging around with who and what's happening. It's amazing how many times a rap beef is just something that's going to end up being a publicity stunt versus real concerns. Yeah. But there's you still got to watch out for it too. That there's things going on, but it's pretty harmless, I think. There's always going to be people that are around there that you're a busy entertainer, you're a busy athlete, you're a busy executive. I mean, you just surround yourself with people that are going to help you out, and you usually surround yourself with people you trust. So you think they've got your best intentions in place.
Well, we're kind of running short on time, actually. But I'm wondering if you could close with any other thoughts or stories or observations about this business that we didn't touch on that you think is really neat.
I think we've got the best job in the insurance business.
Yeah.
I mean, if you walked around our office, you'd see that we're working on the who's who of the entertainment, sports, corporate world.
People must get nervous when they first start.
Yeah, I mean, I feel very blessed to be in the seat that I'm in. I mean, we've insured some of the most unique risks in the special risk A&H space, from people breaking the world altitude skydiving record to, folks trying to circumnavigate the globe in a hot air balloon. I mean,
you learned to write that too.
Yeah, I mean, you name it, we've written it.
How do you look at a risk like that, where you're trying to do something really weird?
Yeah,
it's never been done.
Yeah, I mean, I need another 20 minutes, but some of my favorite stories are around those really truly bespoke forms of coverage. Do
you look at the engineering of the plane? I mean, do you get
absolutely?
People?
I mean,
right
on the risk where we were insuring the guys circumnavigating the hot air balloon. I mean, I flew out at the time to a corporate office in Denver, and they literally had a conference room like the one we're sitting in today, David, where they had the schematics of drawings, all the mechanicals, the engineers in the room.
And what are you looking for there?
Well, I didn't know what I was walking into, to be honest, with the story.
Looks like you guys got it, but I'm done.
But they were looking for, at the time, both of the insureds have since actually passed away. I'm going way back in the memory bank, but they had created essentially a space capsule and a balloon that needed to be inflated in a perfectly windless environment. They had 40 years of wind and weather data, and they determined that there was a desert in Australia that they had to launch this from. And the thing about it was that the balloon would actually inflate, and when it inflated, it would grow to be something, I think, along the lines of 3 times the size of the Superdome. So it's massive, and it would actually take this capsule straight up into the stratosphere, and it would circumnavigate the globe, and just outside of our
somebody in it
with two individuals, a pilot and one other individual, and they needed tens of millions of dollars worth of insurance. How that got done is a story I'll leave for another day, but we were able to do it, and it was just sort of one of the most interesting placements I've been involved in. Chris and I are working on a deal right now that again is purely bespoke. It's something that only 2 or 3 policies like that have ever been written. And I think that's some of the stuff that keeps us really engaged and motivated.
Yeah, for the most part, I find anyway, insurance companies really rely on doing things that they've already done, right? So yeah, I did that before. Here's what it looked like. Same price or adjustments for this or that. But it seems that, that may be the case for athletes where that's more or less pretty similar risks. Sure. But when you do that kind of thing, like something that's never been done before and never be done again, it's a different process.
Yeah.
Right? Well,
Yeah.
well, tell me a bit more about that. I mean, we will extend it for another minute. If you could say, like, what's like your checklist?
Yeah. So
What are the risks? What am I covering?
you're basically running through the same thing, which is you're trying to understand the engineering, the safety factors, everything that's involved.
Yeah.
The same way if we were insuring, a bungee jump. We'd want to know exactly, okay, who's the stunt coordinator, what's being done, how's this working, and what's the stunt profile, what's the experience for everybody that's involved in this. And then you really need to go and sell it to our capital providers. So we spent the vast majority of this podcast talking about what we do on a day in, day out basis, and that's business that we transact with the blessing and authority of our capital providers, mainly Lloyd's Capital. But when you get into something like circumnavigating the hot air balloon or doing these one-off bespoke risks, you're really creating a story and a profile, and then you're going
business plan.
A business plan, and you're
Yeah.
and you're going and you're talking to these folks on the capital side and saying, for this rate we feel is appropriate, would you put your capital on the line? And we're not binding anyone to sort of any of those unique risks. Again, it's a small percentage of what we do, but when you're known as a specialist and you're known as insuring people, you get called into unique things like that, and it's part of what makes our job fun.
Is that the weirdest one? That one, or is it strangest?
The weirdest? No, probably not. I'd have to think about it, but I may have done some stunts. Most everything that we do is covered under NDAs, so I've got to be careful. But stunts isn't the right word, but let's say we've insured some illusionists.
Yeah, sure. Because they do some crazy stuff.
For some crazy things,
Yeah.
and I think those have probably been some of the ones that I've.
Do they tell you how it works?
Yeah.
They do, right?
Yeah.
They have to, because we're like, this goes wrong. But like, it's not going to go wrong. Like, well, tell me, show me.
But there's a history of them going wrong. So.
Yeah, of course. Yeah, of course. Of course. There's a reason why it hasn't been done like that before.
Yeah. So, but yeah, that's sort of our story.
Yeah, great. Well, my guests today have been Ted Tafaro and Chris Lack. Thanks a lot, guys, for joining me.
Thank you.
Thanks, David.